Hey guys, so before I explain the two methods to filter out weak and strong order blocks, first I will implement those two methods in the live market and show how I use them every single time. Then I will explain the basics of those two methods. Alright, so now we are in daily time frame. I don't use daily time frame, but to show you guys how I go about this, let's start from the top till the bottom. So in the daily time frame, if I just first zoom out so that I need to know the trend is clearly downtrend. So that's all I look at in the daily time frame, and I look at the recent breakout structure. The recent breakout structure is right here. So that is all I need. So I will just zoom right here. So now we have to go to the 4 hours time frame so that you can mark this pullback and expect that the market will come down and break this low. So let's go to the 4 hours. All right. So the same thing once again. If I just zoom out a little bit, the market is in a downtrend. So this is the breakout structure. So let's mark this a bit clearly. This point is the breakout structure. All right, now everything is said and done. Now what we do, we expect that the market will go up, mitigate any order blocks. If you look towards the left side, there are multiple order blocks. So we don't know in which OB the market will mitigate and will come down and break this point. All right. So what I usually do is I go to the top point of the structure. This is the swing high of the structure, right? So we can start from this point. So first what you have to do is start marking the unmitigated order blocks in this structure as you come down. So if you look at right here, do you see any unmitigated order block right here? No, every single order block has been mitigated. The only valid order block I see is this one right here. So let me mark this, and let me mark this as a extended order block. All right. So now let's come down. Do you see any unmitigated OBs here? No, everything is already mitigated. And in this point, we have one unmitigated order block right here. So you should also be asking the question why I didn't mark this point, because this has already been mitigated right here. So I won't mark that. Okay. So now let's come down. Any unmitigated OBs right here? This OB is unmitigated. Let me mark that. Let me come down. All these are mitigated. This OB is a very clean unmitigated OB. This one and this one. All right. And this OB is mitigated. This OB is unmitigated. Let's come down. And these are all the recent structures, so we don't have to mark this. All right. So first we have marked all the unmitigated order blocks. So don't get overwhelmed by all these things. Now it looks very complicated. Let me just show you how I actually filtered this. So the first thing you should do is take out your fibs, put it from the top of this point, which is the swing high, to the bottom of this point. All right. Okay. So let me use the 0.5 fib level. All right. So don't even think twice. Remove all the order blocks that is present below this 0.5 range. You can only take the OBs that are present above this point, because there is no correction. Every single order block you mark right here will always be very, very weak, even if it gives the best liquidity and all those things. So let's remove all these OBs. Okay. So what I do in this point is I just tighten this to the 0.5 level, because I don't take any entries before the 0.0 level. That's pretty much suicide in my strategy, and that's what I recommend you people also do. All right. So let's delete this. If you look at right here, we got about 5 order blocks. Now the thing with multiple order blocks is that this is a higher time frame, right? So we don't have to remove all these 5 order blocks. What we can do is filter the strong order blocks and filter the weak order blocks. So when the market mitigates these order blocks, we know which is the strong one and only trade those things. For weak order blocks, we can use confirmation if we really want to take entry in them also. Alright, so what was the first method? What did the order block break? So in this case, this is the swing high. The market gave an inducement right here. The market came down, went up, came down, and this order block was the one who gave this minor breakout structure right here. Let me mark this a bit clearly. So this minor breakout structure was given by this order block. It's clear as day. So this is obviously a strong order block. So let me mark there as a strong order block. Okay. So now let's go down. Let's take this order block. What do you see here? Has this order block broke any structure? If I look down right here, this order block gave movement to this candle, and only the volume that was present in this point break this low, right? So you can mark this as a minor BOS, but this OB already got mitigated. If you just zoom out, you can see this OB got mitigated. So this is an invalid point. So what else do you see in this order block? If you look closely, method 2 applies for this order block because we got a small pullback right here, and then the market took that pullback, and when the market came up, this structure manipulated this high, and only then this entire OB formed, right? So method 2 clearly applies to this point, and let me mark that. Okay, so this is a manipulation, right? So this order block is also a strong order block. All right, so now let's go down. Do you see anything right here? Let me zoom out. Do you see anything right here? Clearly, this order block is a manipulated order block. The market came down, a small pullback, came down, a pullback here, and then this structure hunted every single liquidity right here, and only then this order block formed, right? So it's also very, very clear. So this is also a strong order block. All right. So let's come down. So what do you see here? The market came down like this. And then what happened was the market went up. Before this OB formed, it took this high, right? So this is also a very strong order block. We can mark that as a strong order block. Okay. So what did this order block do? Did this have a break any structures? If you look closely, the BOS happened right here. And this order block did not break anything. At the same time, there is no manipulations right here, right? So this is a weak order block. So let's mark this as a weak order block. Okay. Now let's zoom out. All right. So we have about 4 strong order blocks and we have 1 weak order block, right? So now let's see how the market reacts to all these things. Okay, so the market is going up and all right, so it's reacting to the weak order block. If you see closely, we didn't get any movement. The market straight away invalidated this order block, right? Because obviously that is a weak order block. So if you look at this second point, this is a strong order block. There is no question about that. But still the market went up and invalidated this order block. So does this mean that what we have done so far is completely waste of time? The answer is dead no, obviously no. Even if we do every single thing in the market, we won't be getting the perfect results, right? So in this 5 order blocks, we escaped from one losing trade, which is -1, and we got 1 -1 right here. So now let's see how these 3 order blocks play out in the market. All right. So a perfect example of a very strong order block. If you see right here, the market did not even give you a candle close in this order block. It mitigated with just a wick, and then the market gave us a clean movement towards the downside, right? So that's the strength of marking the strong and weak order blocks. So let me just play this out in the day time frame, and we can see the end result of how all these things played out in the market. Okay. All right. So we will wait till the market gives us a breakout structure right here or breakout structure right here. So let's wait and see what happens. All right. Okay. Beautiful. So I think I don't even have to explain what happened right here. We get a beautiful breakout structure towards the downside. So let me just zoom in. If you see here, the first weak order block completely got invalidated, but we have not taken any entry in that. So we don't have to worry. In the second order block, we obviously will be taking entries and we get -1. That's completely fine. Now let's look at the third order block. The market reacted to the second strongest order block, which is this one, and we get a beautiful movement towards the downside. Let me just say, if you have taken a sell entry right here, placing the stops, you easily get about 5 RR, but obviously we are not going to trade this because this is 4-hour time frame. But you can see the strength of marking a strong and valid order block. All right, so now let's go to the next point, which is this point. So once the market gave such a strong movement, even the volume that was present in this order block was not enough for the market to make it go down and give a breakout structure. So the market once again went up so that it needs to collect more liquidity, took the high of this order block, and then the market mitigated in the third strongest order block that we marked. And then what happened? Let me just delete these things so that it's a bit clear. All right. So the market mitigated this order block and gave us a very strong movement towards the downside. If you see, we get about 530 pips, which is great. We could have taken multiple entries while the market was coming down in the lower time frames. So even this order block was not enough for the market to move down and give a breakout structure. So once again, the market went up, invalidated this strong order block once again, and mitigated our extreme order block. And then what happens? The market gave us a perfectly strong movement towards the downside. It didn't even range that much right here. It just gave us a clean movement towards the downside, giving us a break of structure. So guys, at this point, it should be very clear about the advantages of marking strong and weak order blocks in every single structure, not just in 4 hours and higher time frames, even in lower time frames. This exact concept works again and again. I just chose this example to explain this clearly, right? All right. I will share 2 simple methods that you can use to filter out the invalid order blocks from the valid order blocks, which will obviously give you the best win rate and the best RR. So keep that in mind. But before you learn those methods, first you have to understand the issues of trading multiple order blocks without actually filtering them. So it's nothing too complicated. If you trade multiple order blocks, then the chances of you losing multiple trades is very high. Just look at the structure. The breakout structure happened right here. So as SMC traders, what we do, we follow the trend. So this structure is an uptrend. So usually what do? We mark our point of interest, which is our order block. So while the market comes down, we look for buy entries. and we expect that the market will go down and break this high, continuing this uptrend. So this is like a routine for SMC traders. This is what we do every single time. All right. So the issue here is in this structure, there are in total 3 order blocks. Sometimes there can be even more. Let's just assume that this entire structure that you have taken is a weak structure. So that means that the market is not going to respect this structure and the market is going to go down and take the swing low of this structure. So in this case, what's the worst case scenario? The worst case scenario is pretty simple. You get -1, -1, -1, and in total you get -3 or. So if you are someone who risks about 1% per trade, that's about 3%. And you can say goodbye to your funded accounts. So yeah, that's for fun. You don't have to worry. But this is a very big hit on your trading portfolio. So this is the issue that most people don't look into, but no worries. Now let's look at the methods that you can use to find the most strongest order blocks in every single structure. All right. So I have simplified these two methods into two simple questions that you have to ask every time before you filter multiple order blocks in a structure. So before I tell and explain all these things, first I want to let you guys know that this works only for the people who choose order block as your point of interest. This does not work for any other point of interest. For example, fair value gaps, imbalance, and all those things. It does not work. All right, that being said, the first method is you should ask the question, what does the order block break once it forms? So there is nothing to complicate in this question and all those things. All you have to do is look at what the order block break. So in this example, if you look right here, a candle formed here and another candle formed here, but it did not break this structure. So what the market did is it gave us a slight pullback and a OB formed right here, and only this order block led to the break of structure. So in this case, if you ask the question, what did order block break after it formed? This order block was the sole reason for break of structure for this entire structure. So it's very practical to know that this order block is the strongest order block compared to all these order blocks present in this structure. So this is very, very easy. There is nothing to complicate right here. Sometimes what can happen is instead of giving you a breakout structure, this order block could break something else. That's what most people call as breaker blocks and all those things. But you don't have to complicate this at all. Just ask this question. If it gives the breakout structure, that's fine. Even if it doesn't, just mark and analyze it while you're backtesting. So because in this video, all you're doing is learning about this concept. You will be naturally able to master this concept while you apply this concept every single time while you're backtesting and all those things. All right. So that's one of the simplest methods. The second method can be a bit complicated, but like I said, you're just learning here. Learn this concept, apply this while you're backtesting. So what happens here is the market is an uptrend and this structure goes up. What happens here is a slight liquidity accumulation. Market accumulates liquidity right here and it shows the retail traders as if it's going to go up and break this high. But obviously it doesn't. It traps every single stop loss right here. And then it comes down, hunts all these stop losses right here, even hunts this extreme point, and only then this order block forms. And what happens is the market then gives you a breakout structure. So it's not that complicated. If you see, this order block forms after the market hunted multiple stops. In this case, a trend line liquidity. Sometimes what can happen is the market can hunt a double bottom like this. It will hunt this, form this order block right here, then give you a break of structure. So all these things can happen. If you are wondering, this is what most people call as manipulation. So if you want to name this as manipulation, that's completely fine, but just know that this is the concept. An order block, what it break before forming. So in this case, the market breaks this point, which leads to manipulation, and then the order block forms, and then this order block gives you the break of structure to this entire structure. So naturally, when you ask the question which is the strongest order block in this structure, this is obviously this order block. So like I said, there is nothing really to complicate in these two methods. But once you start applying them in the live markets, you will get multiple doubts and confusions. But you don't have to worry, just keep on doing this. You will clearly be able to find the best order blocks in every single structure. Alright, so guys, this is the simplest way to mark your strong and weak order blocks. If you didn't understand this, I suggest you watch this video once again. I'm sure you will understand. If you have any doubts, leave them in the comment box and I will see you guys in the next one.